Semis among the best performing sectors of the year, and one of the names carrying that space higher. Take a look at Microchip Technology, an earnings beat last week to close out the company's fiscal Q4. Revenue and guidance was in line with expectations. And joining us now with a closer look at a CNBC exclusive is Microchip CEO Ganesh Moorthy. Ganesh, it's great to have you back. The guidance in the sector has been all over the map, and that's just within a silo like auto industrial. What is your best read about what's happening there right now?
Good morning, Carl. Business over the last few months has been starting to slow down as our customers feel the effect of the economic slowdown. They're trying to adjust where should they build, where is their business going. Within that, we are fortunate that our business has substantial exposure to end markets that are much more resilient. And so our results have outperformed most of our peer companies. And because the bulk of our revenue comes from industrial, aerospace and defense, automotive, medical, sustainability, or renewable energy. So those tend to be better in today's environment than perhaps consumer and mobile and PCs. And that's why our results have been better.
The FT today, big piece about the China recovery that hasn't been coming as quickly as some expected, and they cite Qualcomm's comments in particular. How about a view on that?
I think our view is very similar. We expected more of a bounce coming off of Chinese New Year, as well as the shutdowns that took place in the December quarter. It's been muted so far. We believe that given the economic goals that China has for GDP growth, that things are likely to get better into the second half of this year, but that's still ahead of us. And so we have not seen it in our numbers yet.
So can you explain how we've gone to the supply shortage of undersupply to a potential supply glut and oversupply? Is that what you're seeing, particularly in autos and industrials?
So I don't see a supply glut in those end markets, right? So those end markets are still strong, still growing. We don't have the same pressure as perhaps a year ago on number of shortages, number of escalations that we're working on. There are other segments like in PCs and notebooks and consumer electronics, et cetera, where there has been more of a glut of chips. And but the reality is that supply is catching up and demand is slowing down, and the imbalance between the two is closing.
And so what does that mean for pricing for you, and how much of a growth driver that's going to be?
So pricing for us, because our products are all proprietary products, neither in the upcycle did we gouge on price, nor in a down cycle of slowing down do we try to take prices down. Pricing for us is set a couple of years before we actually ship any products at the point of design. And the products being proprietary, sole sourced from us, we have a great degree of responsibility to make sure that we price responsibly, price for the long term. And all we have done is adjust our pricing for any inflationary increases that we've had in the last couple of years. But we don't feel any pricing pressure on our products.
Finally, we don't need to tell you, the street is so hungry to look through the cycle, right, and price in peak inventories and trough pricing. A lot of that's happening in say, PCs at the moment. I just wonder if you think that kind of attitude or positioning is too optimistic.
I think of the cycles not in the next 3 months and 6 months. Longer term, semiconductors are a core ingredient in so much of the innovation that is out there. And so much of what that innovation counts on is companies in the different segments bringing out products, bringing new products. And so I think there is going to be substantial growth for the semiconductor industry. Look past the next 6-9 months where there may be a correction that takes place. And in the long run, we are still growing. We're the engine of many, many different innovations that are out there.